So Scott, in the meantime, let's get started. Let me ask you how's your situation changed with COVID-19, working from home, not working from home? You're still bald, so your hair hasn't grown out.
Yes, yes. The funny thing is everybody's getting my haircut now, so it's great. I'm not alone anymore.
I know. I'm ready for it. I'm ready for it.
But yeah, no, it's going. I mean, my whole team, we're all working from home. It's a lot different than what we're used to. So sometimes we're heading into the office, like one or two of us, and we're getting all our printer, like all the papers and all the different things that we need. But then we're heading home, and yeah, we're working from home. So it's challenging in this sense, right? Because like you, I have kids, so the kids are always interrupting, and they need help, and they want to play, and they don't understand why they're home and I can't play with them. But
yeah, no, for sure. I mean, from my point of view, I think it is challenging. That's for sure, right? I mean, I have two young kids at home. They've been at home for the last, I don't know what, since beginning of March, I want to say. It's hard to focus. It is hard to focus, right? I mean, I always worked from home, but I had that window when they were in school that, that was my time, right? And that's it. But with them being at home, and then we have extended family as well staying with us, it's really hard to focus. And I want to tell everybody out there, or give the message that, listen, we understand what you guys are going through. I mean, we are human beings just like you, and it's don't be scared to admit that, right? It is hard, it is challenging, but here's the thing: you got to get up every morning and put on your best clothes or your best face and go to work like you're going to work, right? Because that's the only thing, I mean, that's going to keep you going. For those of you who are entrepreneurs, for those of you who are running your own businesses or whatnot, compared to everybody else and all the competition, this is where the most successful people are made, right? If you keep grinding and you keep doing those small wins every day, just like getting up and going to work, you're going to have much more success when we're out of this thing than when we started, right? So because a lot of people are going to give up and they're going to relax, it's vacation mode, really. They're getting money from the government, right, Scott? CERB is, I've heard, online, a lot of people are claiming CERB because that's actually more income for them than they were getting from their normal working hours, right? So, it's still vacation mode for a lot of people. And don't get that in your mind, right? Let's keep crunching this, and I'm guilty of it too. So, let's keep crunching, and then and we'll come out stronger. That's for sure. Okay, let's get started here, Scott. I think everybody who wanted to sign up is signed up. We are recording this anyway, so what I'm going to do right after this is, once we edit it, we're going to put it up on the Facebook group and the page there. So if the people haven't signed up or couldn't make it for whatever reason, then they can watch that live. Is that okay with you, Scott?
Yeah, no, that's perfect.
Awesome. So today, basically, we're here, Windsor Investors Club. For those of you who don't know me, I'm your host. Real Estate Investor Savio is my name. We got our friend of the Windsor Investors Club and our leading mortgage broker here in Windsor, Scott Dillingham from Lend City Mortgages, right? So we want to bring Scott on board to talk about the environment, really, post-COVID, post mid-March, I want to say that's when the quote-unquote shit hit the fan, what's happening with the mortgage environment, because a lot of us investors, either we are buying these properties with our own money, or we are finding joint venture partners who have to qualify for these mortgages, right? So Scott, can you give us a brief, introduction to like what have you seen personally when it comes to mortgages in Windsor?
Yeah, so I mean, I've got some numbers for you, but
I love numbers.
Impact for me is not. Are you there? Okay, perfect. Sorry, you cut out there for a second. But the biggest thing I'm seeing besides the numbers is honestly the mindset. So I think as investors, we stand to benefit from this market. But the mindset that I'm seeing is people are applying. The market is still active. But everybody's waiting. They're all waiting. Not all of them. There's a lot of people that are waiting until this improves. And then they're going to take action and they're going to purchase their property, whether they're buying their own home or it's an investment. But there's houses for sale right now. And from my conversation with local realtors and just other people, we all believe that if everybody waits and then this whole pandemic ends, there's going to be so many more bidding wars and price, raises than if somebody who is interested in purchasing actually does it right now.
So here's the question, if you allow, right? When you say people are applying, what are you suggesting, that they're trying to get their ducks in a row? So they're not ready to buy, but they want to make sure that they pre-qualify or qualify, and they want to know how much they're able to purchase in advance. Is that what you're saying?
Yeah. So about some of the numbers. So I ran over the past 2 weeks, and I looked over the emails and text messages and through our online application system, and we had 37 new requests for pre-approval. Now that could be for a refinance. It could also be a purchase. Probably actually 60% would be for refinancing. But they're not wanting to buy today. They're wanting to get in there, lock in the rates, because some lenders are raising rates almost daily. They raise it for a couple of days, they lower it back down. It's very unstable because the liquidity in the market and just different things that are going on. They're not sure. The lenders are not sure how to price the product. Yeah. So for the clients, they're wanting to lock in, and they're waiting for things to improve so they can purchase. So we're getting, I think, the same volume as last year. But last year, there was more action takers at this time. I'm finding people are just preparing right now.
Got it. So on that note, when you said you had 37 new applications, are these investors or, home buyers?
Yeah, so I'm going to say 95% of it is investors. So I primarily just work with investors. Now, the difference with me and the stats that I'm giving you is I do a lot of stuff from GTA to Windsor. So it's not just Windsor. But in every market, it is consistent that people are preparing. So they're not necessarily like an investor. If they see a deal of a lifetime tomorrow, they'll jump on it. But mainly they're doing this to prepare to be ready. But again, from all my talks with realtors and just different things, that might actually be a mistake, because if you wait, there's going to be a lot more competition. So if there's something that appeases you now, I truly believe you should get it now before it really turns into a bidding war.
Right. So, Scott, going back again to the statistics, and I'm a geek for statistics. I love it. You said you pulled it. 37 applications was for the last 2 weeks, correct? If I understood that correctly. Do you know what it was same time last year? Is that gone up? Is that gone down? Is that consistent? What was it in 2019 for the same period?
Yeah. So for me personally in 2019, I would honestly say it's consistent.
Okay.
I think if you talk to other brokers, they might say that now it's a little lower. The reason I'm telling you it's consistent is I was at a bank. My team was half the size, and the bank was tightening their policies. So at that specific point in time, a year ago, for me, it was really tight and tough. So there wasn't as many applications because the bank had just changed the rules. Now, somebody working at a different lender where that did not transpire, I do anticipate that this year it would be a little bit reduced for sure.
Got it. Okay. So we're looking, in your personal experience here in Windsor, you're looking at it almost consistent, maybe slightly lower than what it should be, being the spring market and whatnot. We are looking at, you said 95% are investors because that's really what you deal in. But 60%, if I recall what you said, were refinancing. So they're trying to, I guess, build equity or take out equity from their properties, correct?
Yep. So they're looking to take out equity for that future opportunity that comes up. So they're really preparing for the future. So if you were to compare though last year to this year, there's so many more action takers last year because everybody was ready. This year they're getting ready. That's why they're meeting with us. They want to get ready. Last year they were like, I found a house, let's apply. So that is completely different.
Got it. And in your opinion, when it comes to the banks, the actual, let's talk about the A-class lenders or the top 5 banks over here. Do you find, or have you experienced that they're their qualification criteria are changing when it comes to refinancing, right? So here's me as an investor. I'm getting ready, as you say, I want to buy something. As soon as something hits the market that, that meets all my criteria, I'm going to the bank now, refinancing my properties, pulling equity, or making, putting it in a line of credit or whatever. Are banks open to that right now? Or they're saying, you know what, there is no money, it's dried up, we're focusing on new mortgages, and that's it. What's your feelings in that?
Yep. So they're still taking the application. It is reduced, and they're definitely placing a heavy priority on purchases, because people that are purchasing right now, the bank's mindset is they need to move. Like, something's going on, they need to move if you're trying to do this during a pandemic. So they're really focusing on the purchases. Refinances are absolutely taking the back burner. We have one lender that said if a client wants to refinance in less than 45 days, tell them to go to a different lender, because we can't do it. So they're setting these delays where normally it could be 2 to 3 weeks. Now you're looking at a month to a month and a half, right? So it's, for refinances, it's greatly delayed. But yes, some of the lenders are changing the rules. Like Scotia, I know you kind of messaged me about it. So Scotia is not allowing down payments to come from secured lines of credit. I haven't seen other lenders copy that. It's very possible that you will see it, especially if this really prolongs. I think you might see other lenders change the rules. But what I have seen is I've seen a lot of the lenders, and when I say a lot, I'm going to say maybe half. They've reduced their loan to value. So instead of being 80% loan to value on a rental, it could be 75, and some of them are even as low as 70% loan to value, whether it's a purchase or refinance on a rental.
Wow, that's you're talking about A-class lenders now, or
yes, these are big lenders for sure.
Drop some names. Who are you talking about? Who's reducing the loan to value? Is it the RBCs or the CIBCs? Give us some gold here.
No, so the big five banks have not changed the loan to values yet. It's the monoline A lenders like your National, there's your ICICI, different ones like that would classify still as an A lender, but not a big bank. They're reducing their different things for sure.
Listen, you drop gold for,
it's crazy
for
out there.
investors anyways, right? Because I think key takeaway from this message is number one, banks are prioritizing new mortgages rather than refinancing, right? So that's important for all investors, because most of us are really refinancing in order to pull out equity to do some renos or put it as down payment to a new property or whatever. But that's so important. So Scott didn't say it. You heard from Savio. If you're trying to use a refi to use that money to put it as a down payment, you're probably telling the bank it's a new mortgage, right? That you're moving into the house and it's not a student rental or any kind of rental, because they probably prioritize you more if it's your if it's your home rather than your rental property, right? So keep that in mind. I think the second thing you mentioned is that the delays in refinancing. So expect delays, right? You said 45 days. It's not happening. Some lenders are saying don't even bother, right? Go somewhere else. So they're ready to lose the business. I think that's important as well. So again, going back to what Scott is saying, if you're preparing or if you're thinking about buying something, don't wait too late, because you need to get that, your ducks in row already, right? So if it's going to take 45 days for you to refi, use that money as a down payment for new purchase, you better have done that already 2-3 weeks ago, because the market is picking up, and we can talk about that, separately, but the market is picking up. So you don't want to get back into those bidding wars and whatnot, right? Does that kind of summarize, Scott? We had
absolutely.
Sorry, go ahead. I'm just reading some questions that we're having here, but go ahead.
Yeah, that's okay. No, that absolutely does sum it up. I do think the big banks, if you're going to do a refinance, they have the quickest turnaround time. So, you can see the bank directly or through a mortgage broker like myself or other ones. We have access to many of the big banks, so we can help with that. But the big banks are the fastest, but they're also the toughest. They have the most rules around the lending. So it all depends. So if you are considering, it's best to strategize what lender and how much you need to take out, and then get things going that way too.
I think that's a very important point that you mentioned, Scott, because for most people, right, for the general population, and I'm really generalizing here, they don't know too much more than the when I say first class lenders, we're talking about the top five, and that's it, right? They don't know the other mono lenders, as you said, the Desjardins, the whoever, even I don't know. I can pull them off the top of my head, and that's why it's so important that you talk to an expert. You talk to your mortgage broker, right? Your local mortgage broker. You don't want to talk to a mortgage broker who's not in Windsor if you're investing in Windsor, because they don't know the market. They don't know who's lending. They don't know, how people are going to take it, right? We've had that situation where investors have called me and said, "Oh, you know what? My mortgage broker is not giving me. I'm not getting an approval for Windsor because Windsor has the stigma, right? That it's a very volatile market and so on and so forth. So it's important that you talk to your mortgage broker. And I don't know anybody who goes directly to a bank anymore from an investor point of view, rather than a mortgage broker, because and Scott is sitting right here. I'm going to say that he's not getting paid until he gets you a mortgage. We are not paying him. The banks are paying him, or the lenders are paying him, right? That's his job. And he has the expertise, and he has the knowledge, and he knows who's doing what. So get out to your mortgage brokers. I have some comments and questions over here. I think it's more comments. Madhu says, my heart stopped for a second there. LOL. Can you please expand? Madhu, my internet stopped. I hope it's not the same thing as your heart, but your sound more serious. So expand if you can. I guess you were talking about not using secured line of credit for down payment, I think, but please let us know. Zach says Scotia is not allowing secured lines of credit as down payment.
I was actually referring to.
Oh, Madhu's here. Okay.
Sorry, I was referring to where Scott said that loan to value has come down from 80% to 70-75. I was like, whoa. That's what I was referring to.
Yeah. So that's mainly at monolines, not all of them. So like Manulife, for an example, they're still at. But ICICI, they want 70. So it just really depends on the lender for sure. But it's happening, right? So is it a trend or is it a one-off? That's what we don't know at this point in time because it's still kind of early.
What's the reasoning behind that, Scott? Is this a risk profile, or there's no money in the system? I mean, what's the reasoning for that?
Yeah, so they're anticipating, because many markets, Windsor is kind of so far been excluded from this. Like from all the realtors I've spoken to, Windsor's prices have not really dropped, okay? But there are markets where the prices actually have dropped. So they covered all the markets collectively, right? So instead of making up the rules by market, they're just blanketing the whole thing. But their thought process is, okay, the values are going to drop 5 to 10% because of COVID-19. So we'll drop our loan to value. So we're still maintaining the same risk profile. So that's their thought.
Right. No, yeah, absolutely.
They want you to get a property appraised.
Sorry, Madhu, can you repeat that? We missed that again. Okay, I think we lost him there. But going back to what you were saying, Scott. Yeah, I read some reports this morning, that talked about the Canadian real estate market. The experts, so-called experts, are predicting that it's going to drop 5 to 10%. But then again, it's such a general comment. It's such a wrong negative comment, right? Because I think, as we all know, within Canada, there's provinces, and within the provinces there are sub-markets as well. Right. So each market is definitely different. And I think that's, again, going back, reiterating my point, is that's why you need to have somebody local that knows the market, that can talk to the lenders who are also local, to get the best deal. Right. So that's so important for me. Okay, cool. When it comes to these, we talked a little bit about refinancing versus new mortgages and so on and so forth. We talked about Scotia not wanting to use your secured line of credit for down payment. Are you seeing anything, Scott, when it comes to criteria? So from any or all of these lenders, is the criteria changing other than loan to value? Are they asking for more documentation? Are they asking for more really meat on the documentation, right? I mean, we could get away with some things before, right? When it comes to income verification, so on and so forth, credit scores, have the credit score requirement gone up, stuff like that. Can you share some light on that?
Yeah. So there's only one change that I've witnessed. So nothing to do with your credit score. The documents are the same, right? So that's sanctioned by the government of Canada as to what the lenders need to get. So that's been the same. But what they're doing is they're calling the employer now when you apply, and they're calling the employer a couple days before funding to make sure you're still employed. So that is one of the things that you have to keep in mind. So if there's any chance that your job, you could experience a temporary layoff, it might actually be best to hold off on the financing, because the lender is going to call your employer a couple days before closing and make sure you're still there. Now, there is exclusions to that, because we have some cash flow only lenders that don't look at personal income, and they base it on the cash flow of the property. So obviously that wouldn't come up with those lenders, but that is what I'm seeing is the income confirmation. They are confirming 100%. But on the flip side, if you're laid off, but your company has a return to work schedule, if you're pretty close to those launch dates of that schedule, they will act as if you are employed. So they've kind of tweaked that a little bit.
That is very interesting information. Very interesting information. So they're pretty much verifying 2 times. It's not just not the first and that's it, right? It makes it harder when you have a long closing, right? So if you're 30, 60 days, then it makes it quite challenging. Yeah, and that's something that we definitely have to keep in mind. Okay, that's good information. You mentioned something about if some lenders are looking at cash flow, right? Just cash flow. It was always my understanding or what we've been learning, when you have commercial properties or multifamily properties, anything that has more than 5 units, then definitely it's not you as the individual that they're crediting. It's really, your business, right? And they're looking at cash flow and the asset, and what it produced. But you're saying that, when they look, some cash flow lenders, are you referring to residential properties? Are they looking at your total portfolio and saying, okay, this is what it's doing? Okay.
Yeah, so you have half the puzzle. So you kind of nailed the nail with a hammer when you said commercial lenders will look at that. So there's commercial lenders that lend on residential properties at residential rates with that same cash flow model. So for those lenders, they don't require an income. So I'll give you a perfect example in case anybody's in this scenario, but there was this customer that I had, and she had, I think, 8 or 9 properties, and she sold her business. She made decent profit, but no income now, like 0 income. And she wanted to refinance a couple of student properties, right? So that even makes it more difficult because it's a student property, but through the commercial lenders, it was no problem. I think she got 2.89 on a 5-year fix, which is really good for a student rental through a commercial lender with no employment. And she was happy. So we can absolutely do that, but you have to be cash flow positive, right? You can't be bleeding and have no job. And if it looks like you're going to be bankrupt tomorrow, they're not going to do it. But if, there's strong cash flow, the portfolio makes sense, they'll do it.
Listen, all you guys who are on this call, don't be calling Scott right after this meeting, because I'll be on the phone with him for the next 2 hours, right? We're gonna crash. We're gonna trash this out, Scott. Like this is it's mind blowing for me, right? The fact that they're looking at single family homes, commercial lenders, and giving us residential rates. This is the first, honestly, it's the first time I've heard this. Clearly, I'm not talking to enough mortgage brokers, so I'm glad that I got you on here. Is that a specific lender that you have in mind, or can you share that, or is that not?
It is a specific lender that I don't like to share because I like my competitive edge, right? If everybody knows this, then all my competitors
absolutely
will follow,
that's totally fair. That's totally fair. We got to go through Scott. Simple as that. I mean, yeah, but if that's possible, that's awesome. I think a lot of real estate entrepreneurs like myself who are doing this full time, and there's no real no T4 income, right? Which is what all the big lenders are looking for. This is a solution that might actually work for us. So very, very interesting. I love it. Guys, listen, if you guys have any questions for Scott, we have him here, we have him live. So just drop it in the chat room over there, and then we can take it, live with Scott, and yeah, and we can keep the discussion going. Speaking of which, so what do we have? We have Taylor saying that he has to get off. Madhu says, okay, is anything over 6 units automatically considered commercial and requires 25 to 30% down?
Hey. Great question. So normally, yes, we do have one specific lender who will do up to 8 units as residential. But anything from 5 to 8 units, they do want 25% down. But it will be a straight up residential mortgage, 30-year amortization, all that good stuff. No lender fees, none of that stuff, because it's a large credit union. But if I was to bring this application to a bank like Scotia, TD, whoever, they would deem that as a commercial application. I think actually RBC might do it. I've heard that they do these now, but then I've heard they don't. But I've heard RBC may do 6 units as residential now. I'm not sure because I heard that went away. But so they might be the only other lender to consider that.
Okay, does that answer your question, Madhu? If it doesn't, I think you would have a call with Scott anyway. So, again, going back, that's why we need the mortgage broker, right? I mean, they got to work their magic. I mean, I think in Scott's defense, I got to say that I think every single deal is different, right? And every single client is different, and application is different. So, it's very hard to generalize some of these answers, right? So that's why you need to call Scott and get him on your case and see what happens, right? Just out of curiosity, Scott, I mean, this is maybe a very naive question. When somebody brings you an application and is looking for a mortgage, and yes, maybe we take this investor case, right, where basically the investor doesn't have any T4 income, but the income is really from his properties, which are cash flowing maybe nicely, right? Do you go to one specific lender and present this case to one specific lender, or you do it to multiple lenders and say, okay, whoever bites first is the winner here? Like, how does that work from your process point of view? Just out of curiosity.
Yeah. So if I'm unsure of if the lender will approve it or not, because it's a unique scenario, I do send it to a ton of lenders. But my job is to know what the lender will and will not approve. So generally, we're only sending it to one lender because it'll be a slam dunk lender. Like, we don't want to waste the customer's time. We don't want to waste lenders' time reviewing deals that they're never going to fund, right? So we really try to target it. But again, if it's a scenario that we're just not sure of, we'll get it off to a bunch of different lenders. So
got it.
It depends. Now, this cash flow lender, there's only one that I know of that does this on the residential properties.
Residential properties, right. Got it. Yeah, so when Scott says no, it means no, basically, right? Don't bother asking him. Send send the application out to many other lenders. So I think that's where his expertise comes in, right? Dan is asking.
We actually get.
Sorry, go ahead.
No, I was going to say, like, as a mortgage broker, just so you guys know, because a lot of people don't know this, if we send a bunch of applications to a specific lender and none of them ever fund, that specific lender will say, okay, we don't want to work with you anymore, and they won't even receive your applications. So you don't want to do that unless you have to do that. So that's kind of why as well. But because of that, we make it a point to know the lender's criteria.
Yeah, excellent point. Yeah, you just don't want to. You don't want the shotgun approach, right? You want really laser focused sniper approach, and to get what you need, because otherwise you might actually shoot yourself, and that's not a good thing. So Dan is asking, what is different about student rentals? If the property is rented under one contract, is there a difference between it and a family rental? Okay, so if I understand correctly, what he's trying to say is that, okay, you have one lease with one of the students, and then they have subleases with everybody else, right? So, does that, from a lender point of view, does it make a difference?
Sort of. So, I mean, if there's one lease, some of the lenders that say they don't do student properties, they'll consider it if it's one lease. But the thing is, if the appraiser goes through the property, this is a lender that will not do student properties. And if the appraiser says there's locks on the door or it's rented to students, it's done. They don't like that product, certain lenders, and it has to do with recourse. So if they ever had to repossess the home, from statistics, student properties are harder to sell because the target audience that would buy it is small. Where if it was a single family home, the target market is everybody, right? So they're looking at it on how we can quickly sell this property if we have to repossess it. And that's why they don't like the student properties. But there is a bunch of lenders that we have access to that do them, that we don't have to hide the fact that it's a student property. But if you want to get, with some of the big banks, they really don't like them.
Yeah, just to add on that, Dan, personally, I'm not a student rental guy. That's not, what I like to do, but I know a lot of investors who are into student rentals, and this discussion has popped up a lot of times. And the worst case scenario is what they do is they go in. You see, the issue is not the bank. The issue is the appraiser, right? Because when the appraiser comes home, they can see there's locks on every single door. Then they know, okay, it's not a family that has locks on every single door. This is a student rental. So what some investors have actually done is gone and changed the locks just for that appraisal time, right? So they know the appraiser's coming in. They put in just normal handles or whatnot, and as soon as the appraiser goes, they're back to locks, right? So it's not the right thing to do for sure. I mean, it's cheating a little bit, but I've known for it to happen, right? But I think from the bank's point of view, if they have that one contract, they don't know different. They don't see the subleases, right? So I hope that answers your question there. Zach has a good one over here, Scott. So do you think grouping your portfolio within one bank is as important as an investor, or is this irrelevant? And should you focus mainly on where you're getting the best rate? I'll let you answer that first. Let me briefly say this before you get into it, Scott. Top of the mind answer, Zach, is basically there is a method to this madness, right? And I think Scott is going to go into detail over here. As an investor, if you're building a portfolio, you've got to go to bank number A first before you go to bank number B and bank C, right? That's the only way. You got to max out within from the different banks before you can go to the other banks. Because what happens is that if you go to bank C first, you're going to max out, and then it's very, very hard for you to go back to bank A and get mortgages for them. So, Scott, on that note, I'll let you expand on that.
Yeah, well, you actually answered it correctly. So I'll give you an example. I had 8 rental properties with CIBC when I worked there, and they actually did unlimited rental properties at the time. And then they said, you know what, we're done. We only do 5. So I had 8 with them. So I had to get 3 of them to different lenders so I could even refinance them. Like, they wouldn't even let me refinance any one of them because I had over their threshold. So I don't think it's good to group all of it with one lender if you have the ability. Because we have one lender, Desjardins, actually. They'll do 12 rentals. I don't think you should do all 12 with Desjardins. I feel like you should start off with a different bank first. And the reason for that is because of what I experienced with CIBC. If that lender changes the rules, you're stuck, you're handcuffed, and you don't know what's going to happen. So what we do, and Savio was alluding to this, is we'll match the client up. We essentially create a roadmap. It's not something that we hand to you and say, here's your map, but we know, okay, this lender will do 4 properties. Some lenders will do 6 doors, right? So we count how many doors are in each unit and say, okay, that won't work. Like Scotia has a door policy. TD has a unit policy. So you could get 4 fourplexes, or that would be above what Scotia does. So it's just different things. So we maximize based on what you want to do with your portfolio, and then we'll hit you up with different lenders. So it will be numerous different lenders. It's all with the overall game plan of acquiring the maximum amount of properties. But we don't want to do them all with one. So like this cash flow lender that I was speaking to earlier, that may help Savio in his scenario, they'll do unlimited. But again, if they change the rules, he's stuck. So it may not make sense to go there unless you need to go there. So it's I say always different lenders. And the other thing too, the banks will not give you a lower discount if you have all your products with them. They actually deem that as more risky because now they've lent you more money, even though you're an investor. You're part of Wind City. So you guys get the training, you get the education. Some investors are not part of any group, and they're just going out there and doing it because they've seen something on TV, and they're risky and they're losing properties. So investors is actually a big loss for many lenders. And we don't see that or realize it because you're all part of an environment to learn and grow and develop properly. But in a lot of markets, that's not there. So you do not get rewarded with lower rates if you group everything with one lender. So I hope that answers your question, Zachary.
I love it. That's a beautiful answer. That's it really touched on some points, more than what I was alluding to. But again, going back for me, guys, it's your power team, right? You are the investor. Your job is to go and find the deal and maybe find a joint venture partner. Make the numbers work. It's not your job to find mortgages, or where's the best place to go mortgage. That's Scott's job, right? And it's about having that power team, right? And if you stay with, or you find and you have a good relationship with your mortgage broker, Scott talked about the roadmap. That's exactly what you should be doing with your mortgage broker. Whenever you have a plan in your mind to go and buy something or sell something or do a refinance or whatever, the first person you got to talk to is your mortgage broker, because he's going to tell you, listen, don't do this because this is going to put you in a compromised situation with this particular lender, where you probably have already 2 or 3 properties, right? So he's going to show you that roadmap, and he's going to give you the direction to go to. Okay, so again, it's about power team, and that's the short answer for me, right? I love having Scott here to talk about all these things, but yes, I'm retaining some of it. I'm not retaining all of it, because I know at the end of the day, if I need something, I'm going to go back to Scott and ask him, right? Why bother? Why try to learn this thing? That's not my job. I'm not a mortgage broker. Okay. Okay, we are going to go off on a tangent over here, Scott, and move away from mortgages. I want to talk about a little bit, going back to COVID and the situation about cash flow and, people without jobs, so on and so forth, things like that, right? Let's talk about increasing credit limits. Is now the right time to do it? Is now the right time to even ask the question? When I say credit limits, I'm talking about secured line of credits or even unsecured line of credits, credit cards, things like these products that these banks give. A few months ago, you used to get these mails, saying that, oh, you've qualified for, I don't know, $5,000 or $10,000 increase in your credit limit. Me personally, I haven't seen them recently, right? I don't know if that's my situation or not. But should I be calling the bank right now and saying, hey, listen, I want to increase my line of credit?
Oh, sorry, there, you paused there for a second. So my gut feeling, this is me as an investor thinking, okay, should I increase my line of credit? So this is not me from Len City. And honestly, I think if you need to, do it. Because some people are in a scenario and they need access to funds. So if you are, absolutely do it. But if you can wait, I think you should. And here's why. The lenders on lines of credit, they're now Prime Plus, because the Bank of Canada lowered the rate so low, they're Prime Plus. So can you imagine in a year if you get a line of credit at Prime Plus half, let's call it, and then the interest rates go way higher, you're going to be paying a way higher interest rate than you normally would have. So I suggest, as you see the pandemic ending, the banks, I think, are going to get really aggressive at that point in time with all their credit products, because they know it's ending and they want to boost their portfolio again. And at that point, the jobs will be going, like everything will be going. So I think that's when you're going to see the best promotions. And then you can start getting some of that prime minus. So like if you get a variable mortgage, quite often you're getting prime plus, right? Where a year ago it was prime minus. So you don't want to accept a high rate, and then when they raise the rates back up to normal, your interest rate's way up there. Like you don't want that. So I think when the pandemic ends will be the best time to apply for these credit products.
Nice. So in your crystal ball, when's that ending? I don't have to answer that question. I'm pulling your leg here. But no, that's I love that response, right? If you absolutely need it for whatever reason, do it. But if you don't, and then again, you got to think about from the bank's point of view as well. They're stressed out as it is. I mean, they're probably one of the ones who are most nervous of what's happening with the economy and, the housing market and so on and so forth. As Scott already mentioned, their focus is new mortgages, let alone refinancing. And then if you're going there and asking, oh, I want to increase my credit card limit, boy, you're probably at the bottom of the pile there, right? Or they're going to be thinking to themselves, what is this guy doing, right? So maybe it's not the best idea unless you're absolutely in dire straits and you need to finish that rental project or something like that, and then you probably need to increase your limit, then go ahead and do it. Okay, I love that response, Scott. We have another question from Madhu here saying, have you seen any changes in the bank appraisal values? Great question. During the pandemic, how are they doing the appraisal? Is it a remote desk appraisal? Any thoughts on that, Scott?
Yeah, so to be honest, as of now, I have not seen any appraisal issues. Now, I have heard from different colleagues in different cities and stuff that they're starting to see that. So Windsor could be behind. I know there's huge demand in Windsor because we lagged the rest of Canada. When Toronto and London was getting appreciation, Windsor was flat. Like we had nothing for years. So I think Windsor's still playing a bit of catch up. So I think that's why for us, it's not too much of an impact. But I don't want to say that it can't happen. I mean, if this goes on long enough, I do think that you'll start to see that. But as far as how they're completing them, yeah, they're doing a FaceTime with the homeowner or the tenant. If it's a rental, if it's an owner-occupied home, usually they're doing a drive-by or they're using CMHC. It's called Emily, and Emily will guarantee the value of the property for that lender without even doing appraisal. It's just done automatically. So some of the appraisals are through the Emily system, and then some are the FaceTime kind of drive-by kind of deal.
Okay, awesome. Yeah, I mean, definitely I can say, myself, I focus really on the South Windsor market because that's where, I do my legal conversion, my legal duplexes. And I can say, the first 2 weeks of March, that's when, again, quote unquote, the shit hit the fan, right? And prices dropped. Houses were not going as high as they were before. But since March, I want to say 20th, the third week of March, the market is still hot. I can't get into any of these homes, right? Homes that are listed for $299 are selling for $375,000 in South Windsor. That was happening, January, February. Okay, so from an appraisal point of view, I don't think there's any issue because the comps are there. The comps are available. Yes, they can get into the house, but then again, as Scott said, they're driving by or whatever. But if they want to pull comps, the comps are there. The market is not dead, guys. Again, I'm speaking for South Windsor. While you were talking, Scott, I had a light bulb went in my head and said, I got to bring a couple of realtors here. So we got to bring a couple of realtors and talk about the different areas in Windsor and what's happening since COVID-19. So get ready for that. Final question, guys, if you guys have more questions, put them on the chat group or, Scott, before you leave, please put your contact details in that chat group so people know how to get in touch with you. Final question for me is basically, what's your thoughts? When will this all end? Give us a date, a time, a place. Give us something.
All right. Well, I think it's going to end July 13th. And the reason I picked that is one day before my birthday. So it'll be done right before my birthday. But to be honest, no, I think the summer. I mean, the government's talking about sort of starting up work, return to work. The States is doing that. We always follow what U.S. does pretty much all the time with their lending policies, like everything. So I think we're going to be a little more gradual and cautious than the States, but I think by the summertime, I think most companies will be starting back up at work. And I think then we'll kind of see some things, which is perfect timing because that's when people like to move is in the summertime too. So
yeah. No, I couldn't agree. I couldn't agree more than you, right? Because this is my personal opinion, like it is yours. I believe by May 31st, really, we'll see some resemblance of going back to where we were before, right? Obviously not for schools and stuff like that, but just from work point of view. And I love what he said. We have a Southern brothers to experiment on first because they're going crazy. Everybody's out and about on the beaches over there. So if they survive it, then there's a good chance we'll survive as well. So we are lucky that we have them to test on. They are test dummies. But yeah. So on that note, thank you, Scott, so much for having us. For coming on our show and giving us insight about mortgages in Windsor. I love talking to you all the time. Every time I talk to you, I learn something new. Put your information on the group chat over here, so the rest of the guys can actually contact you. Those who haven't signed up for this event and watching us live, then I'm sure once they see this in our Facebook group, they are going to contact you as well. Always look for your mortgage broker. I'm your host, Real Estate Investor Sav. Listen, we got some great meetings coming up, some great conversations that we're going to have in our Tuesday Talk series. So next week we have Claire Drage. So we're going to be talking specifically about being the bank. And more specifically than that, how are you going to use your self-directed RSPs to actually lend money? Okay, so Scott goes to the big banks and get money. We're going to be talking about you becoming the bank and how you can use that as an income stream. So you don't want to miss Claire Drage. Awesome lady to talk to, awesome accent. So we're going to have some fun there. May 19th, the week after that, we're going to be talking about multifamily. So if you're a residential investor and you want to get into multifamily, We're going to be talking to Mark Baltazar, who is the multifamily expert here in Ontario, in my opinion. It's a really basic conversation, right? So we're not going to be talking numbers as in, okay, what does a multifamily bring versus a residential? I think that's pretty self-explanatory. But how do you transition, right, as a residential investor into a multifamily investor? And of course, we're going to be talking about, how does multifamily owners deal with the current situation with COVID and rents and so on and so forth. So watch out for that. May 26th to finish up this month. We're going back a step and we're going to be talking to the newbies. So if there's any newbies listening to this and who want to get started in real estate investing, we're going to be talking about why you should be doing it in the first place, right? And more importantly, or the crunch, the key message here is how you can become a millionaire by having just 3 properties. So we're going to be talking to Michael Dominguez, who is a longtime RAIN member, a realtor, a coach, an author, a friend of mine. And we're just going to talk about the process. All you need is 3 properties to become a millionaire. So we got a great lineup for the next couple of weeks before we hit June, and hopefully everybody gets back to work. So watch out for our group for all these meetings, and sign up guys. Ask your questions beforehand so we can put them, and we can put our guest educators on the grill. All right. So thanks again for coming out. Thanks, Scott, and we'll see you. Stay safe, stay apart.
Thank you, Fabio. Thanks, everybody.